Hello, this is Jim Smith at GANanalysis.net. If you look at Apple, Apple's obviously a major stock. A lot of funds, and a lot of people have it in their portfolio. So, question is, what can we say about Apple today? Well, for starters, if we do a normal GAN fan, the one by one, in this case, we're using a scale of 1 point, price unit 1 point per week. Since we're looking at a weekly time frame, we're drawing this slope that moves up at a rate of 1 point per week. It offered support and resistance, and then up here it got above it briefly, came back and tested it, failed, came back, never quite got back to it. So that's a loss of momentum. It completed a 45-week, just over 45 weeks, 46 weeks high to high. You can see here from low to high was 44, so the two together would be 90 weeks low to high. Very nice. That's what gave you the high. And then a lower high, 45 weeks down from high. And now if you close below 138.50, guess what happens? This has offered great support week after week after week. When it gives way, you have to be ready for a waterfall decline. But the question is, how low will it go and when will it get there? Well, I can't give everything away free. You want to subscribe to the service. It's not expensive. Trust me, if you own Apple, you're going to want to see this report. This is probably one of the most important reports on any stock you're ever going to see. It is, you're not going to get this from a fundamental analyst. He's not going to be able to tell you how low it's going to go, when it's going to get there. And even with GAN, you can't always know exactly how low it will go, but you have various GAN support levels all the way down. You know which one is more likely to be support. And more importantly, you know when the bottom is likely to come in. So if you know time and price, you have a very strong, you keep an open mind about the exact GAN level that's going to give it support, but you know when it's going to bottom. That's the important thing. Time is more important than price. People fail to realize that. And trust me, even Warren Buffett, even though he likes to say, don't try to time the market, well, guess what? I got news for you. He times the market. How? He holds higher levels of cash. He probably still owns Apple, but he owns a lot of cash, and he's probably going to buy more when it goes down. But the question is, when is it going to bottom? When do you buy more? If you still like Apple, you might decide, hey, I'm not going to sell it here. Personally, I think that's a mistake, but people have different time horizons. Some people want to hold a stock for 100 years. I'm not one of those people. But if that's your cup of tea, that's fine. You might still benefit from looking at the GAN charts by knowing when is it going to bottom, when can you buy. If you missed the rally in Apple and you want to buy it, there's going to come a time when you'll be able to buy it a lot cheaper than where it is right now. You need to know when that time is. And you need to know which GAN levels are likely to offer a bottom. So going forward, time and price, that's what GAN is all about. You use both together. You don't use time by itself. You don't say, oh, here's the cycles. I know this is the important. Yeah, no. You look at time in relation to price and you come up with your view. So if you get to a certain GAN support level by such and such a date, when the cycles are due, hey, you have a higher probability of a winning trade because time and price work together. Why do you think this chart works? Why do you think a GAN fan works? It's because there are two aspects. There's an x-axis and a y-axis. They're both important. When you get to the one by one line, guess what? You're finding resistance. And when do you do it? In sync with a Gann cycle, right? Just about 45, in this case 44, close enough. 45 weeks would be a Gann cycle. And why did you form a high here 90 weeks up from low? It's obvious. The Gann cycle is what gave you the high. And you didn't quite get up here to the 1-by-1 line. Why? Because you're losing momentum. You had the momentum here and here, but you don't have it here because you never quite got back to the line. So the thing to remember with Gann, it's always about time and price. People are going to say to you, oh, I have the secret vibration of Gann. Baloney. The thing you need to know is time and price. That is the most important thing. And it doesn't mean you're always going to be able to predict the market perfectly. You can't. But what you can do is to be open-minded and say when time and price come together, you have a higher probability of a turn. That's what you're waiting for. So if we close below 138.50, that's the 1-by-2 line, you take out this support line. Guess why? Every week it finds support here. Well, if this gives way, guess what happens? It really starts to slide. And do we know that it's absolutely going to give way? Sometimes you have to wait. You have to be open-minded. You have to say, hey, let the market tell me what it wants to do. If somebody's bullish on this stock, they can say, hey, I don't believe you. I think it's going to bounce off this and go higher. Well, the market's always right. I'm not always right. But if you close below 138.50, I would venture a guess that it's going to go down. Now, there are going to be stocks, down here you can see, hey, it took it out and it came right back up again. And somebody might argue, well, you take it out and go right back up again. Well, the difference is that you've had a prolonged rally and you completed a 90-week cycle into high and you're forming lower highs in sync with a 45-week cycle. So you have this progression. You know that this was likely a major high because it topped out in sync with a 90-week cycle. And you got confirmation that you're starting a major correction when you form a lower high in sync with a 45-week cycle down from high. So you know what time of day it is. The only people who don't know what time of day it is are talking heads on CNBC. They're going to tell you to buy the dip every single time. That's not what Gann does. Gann is not based on opinion. Gann is based on time and price. It's called geometry. It's science. It's mathematics. It's something that, is a talking head is just going to spin the market. They're going to take whatever's happening in the market and try to exaggerate it at the time that it's happening. They're going to use their opinion and they're going to masquerade like fundamentals. Most of what you see in the media is just opinion. It's just some talking head who is the chief economist of such and such a firm on Wall Street. He's got a big name. He comes out, he spouts nonsense, and you believe him because, well, he must be smart. He doesn't give you anything to hang your hat on. Gann doesn't say, hey, trust Jim Smith. Gann says, trust the Gann lines, trust the Gann cycles. It's all mathematics, it's geometry. And if you look at the market, everyone's going to tell you it's a random market. I'm telling you baloney. You cannot say that this 90-week cycle was random. You cannot say that a 45-week cycle down from high was random. And you cannot say that when this thing breaks and it goes down hard, that it's random. The random walk is it's a fable. It's a fairy tale. It's ridiculous. But if you want to believe in the random walk, that's fine. The market is big enough for plenty of fools. And if a lot of people want to buy into that, God bless them. We need more fools, because you would not see this huge waterfall decline if everyone believed in GAN. Because the reality is, look at this. There's still a lot of chumps out there who buy and hold forever. And they're not going to believe it. When this thing goes down hard, guess what? CNBC, they'll get some talking head on there that says, nobody could have predicted this. Nobody could have predicted this. Well, GAN just is doing it. If this gives way, you're going to get a big whacking move down. Now, technically, you might want to wait for a weekly close, because there are times when you take something out, you take it out down here and you recover it. But the reality is, if you get a weekly close after a major 90-week cycle called the high and a 45-week cycle called the lower high, there's a high probability you're going to go down hard. Remember, this is not the beginning of the rally. This is after a huge rally already happened. So you want to realize where you are in the cycle. If you're down here and the thing is just starting, you say, hey, well, maybe it's going to bounce off this GAN line and go higher. But, we did it here too. But if you're up here and you've already completed a 90-week cycle into high and a 45-week cycle down from high, forming a lower high, and this gives way, you got to look at the whole totality of the picture. You got to look at time and price together. What's the probability that if you close below this, you're going to go right back up? Well, I don't think it's very good, but anything's true, anything's possible in the market. I could be wrong, but I feel pretty good about the fact that that 90-week cycle called the high and the 45 called the lower high. So don't trust the talking heads. Do your own homework. Look at the GAN fan, and if you break an important support level after a big cycle called a high, this applies to all stocks, not just to Apple, and also, of course, the S&P. If you're interested, I welcome you to go to my website, www.gananalysis.net, hit the shop button, try it out for a month or 3 months. It's not expensive, and trust me, if you own this stock, you're going to want to see what I have to say about Apple. This is a critical juncture for this stock and also for the whole market. It's going to be wild. This is going to blow your mind.